You are watching Daily Market Pulse, heading into the new week, Sunday, May 17, 2026. If you want a clean daily read on macro and market risk, subscribe for the next briefing. WTI crude is trading at about $101, slightly lower on the day. Today's agenda: weekly recap, Bitcoin and crypto, gold and silver, oil and commodities, FX markets, stocks and bonds. Let's start with a look back at the week that was. WTI crude is trading at about $101, slightly lower on the day. WTI crude is trading at about $101, slightly lower on the day. This immediately reignited inflation fears, sending shockwaves through global markets. Major stock indexes like the S&P 500, Nasdaq, and Dow Jones all ended the week in negative territory, reflecting investor caution. Gold is trading at about $4,560, lower on the day, down about 2%. The crypto market navigated a complex landscape, with Bitcoin holding steady despite macro headwinds and anticipation building for crucial regulatory news. The week's events have set a cautious tone for the coming trading sessions, with investors now bracing for what's next. Now let's look at today's picture. Here's where things stand right now, heading into the new week. Bitcoin is currently trading around about $78,117, testing crucial support levels, below the about $80,000 million arc that has held since early May. WTI crude is trading at about $101, slightly lower on the day. Despite these pressures, on-chain fundamentals remain strong, with Bitcoin exchange reserves at a 7-year low and significant whale accumulation continuing. The upcoming Clarity ACT vote in the U.S. Senate Banking Committee today at 10:30 a.m. ET is a major focus, as it could provide much-needed regulatory clarity after years of uncertainty. The Clarity Act, if passed, could significantly shape the future of cryptocurrency regulation in the United States, impacting everything from exchanges to stablecoins and decentralized finance. Regulatory clarity often reduces perceived risk for institutional investors, potentially unlocking further capital inflows. Conversely, unfavorable regulation could create new challenges. The current low exchange reserves and high whale accumulation suggest that large holders are not moving their Bitcoin to exchanges, indicating a belief in future price appreciation, despite short-term volatility. The crypto market is in a holding pattern ahead of the Clarity ACT vote, with prices showing muted reactions to macro news. Bitcoin is consolidating, indicating indecision among traders. Ethereum and other altcoins are also experiencing slight downturns, with Ethereum trading around about $2,187. The Fear and Greed Index remains in fear territory at 27/100, reflecting the current cautious sentiment driven by regulatory uncertainty and inflation concerns. All eyes are on the Clarity ACT vote today. A positive outcome could see Bitcoin break above about $80,000, while a negative or delayed decision could keep it range-bound between about $76,000 and about $80,000. We'll also be watching for any significant whale movements and the impact of the Federal Reserve's future policy decisions on risk assets. Moving on to the precious metals. Gold is trading around about $2,380 per ounce, showing a modest gain of 0.8% today. Silver is trading at about $78, lower on the day, down about 9%. Both metals are benefiting from a combination of factors, including persistent inflation fears and ongoing geopolitical instability. As inflation data continues to come in hotter than expected, investors are increasingly turning to gold as a traditional safe haven asset and a hedge against rising prices. Silver is following gold's lead, with an added boost from expectations of strong industrial demand. In an environment where the cost of living is rising and geopolitical tensions are high, gold and silver offer a tangible store of value. Unlike fiat currencies, their supply is limited, making them less susceptible to devaluation through monetary policy. For investors, holding precious metals can provide a crucial hedge against unexpected economic shocks and currency depreciation. The outperformance of silver suggests that industrial demand, particularly for electronics and green energy technologies, is also a significant supportive factor. Precious metals have seen steady demand as investors seek to preserve capital amid market uncertainty. WTI crude is trading at about $101, slightly lower on the day. While stock markets have pulled back on inflation jitters, gold has held its ground, demonstrating its appeal as a reliable safe haven asset. Silver is trading at about $78, lower on the day, down about 9%. We'll be watching upcoming inflation reports closely, as any further acceleration could boost precious metals. Geopolitical developments in the Middle East will also be a key factor. Additionally, the Federal Reserve's stance on interest rates under its new leadership will influence the broader economic outlook and, consequently, demand for gold and silver. Let's turn our attention to the energy markets. WTI crude is trading at about $101, slightly lower on the day. WTI crude is trading at about $105 per barrel. This sharp increase is directly attributed to escalating instability in the Middle East, creating supply concerns and driving up prices. The annual increase in energy prices now stands at a substantial 1.8%, posing a significant risk to headline inflation figures and potentially forcing the Federal Reserve to reevaluate its interest rate path. WTI crude is trading at about $101, slightly lower on the day. This surge threatens to undo recent efforts to bring inflation under control and could force the Federal Reserve into a difficult position, either tolerate higher inflation or raise interest rates further, risking an economic slowdown. For businesses, it means higher operating costs, and for consumers, it translates to higher prices at the pump and for goods and services. The current geopolitical situation in the Middle East is a critical factor that could prolong this price shock. WTI crude is trading at about $101, slightly lower on the day. Stock markets have pulled back as investors factor in the potential for renewed inflationary pressures and a more aggressive stance from the Federal Reserve. Bond yields have also seen an uptick, reflecting these inflation expectations. The energy sector itself, however, may see some benefit from higher prices, though the broader economic impact is a significant worry. The key factor to watch will be the stability of the Middle East region and any further escalation of tensions. We will also be closely monitoring upcoming inflation data to see how much of this oil price shock is passed on to consumers. The Federal Reserve's commentary under its new chair will be crucial in understanding how they plan to address this renewed inflationary threat. Now let's look at the stock and bond markets. Major stock indexes pulled back from record highs on Friday, with the S&P 500 closing down about 1% at 5,425, the Nasdaq down about 2% at 19,215, and the Dow Jones Industrial Average down about 1% at 42,150. WTI crude is trading at about $101, slightly lower on the day. The U.S. 10-year Treasury yield rose 6 basis points to 4.7%, reflecting increased inflation expectations and a potential for higher borrowing costs. The U.S. dollar index, the dollar index, also strengthened, closing at 104.8. Rising Treasury yields make borrowing more expensive for companies and consumers, which can dampen economic activity and put downward pressure on stock valuations, especially for growth-oriented tech companies. WTI crude is trading at about $101, slightly lower on the day. For bonds, higher yields mean lower prices for existing bonds, but they also offer a more attractive return for new investments, especially as investors seek safety from equity market volatility. The strengthening dollar can make U.S. exports more expensive and imports cheaper. Markets reacted negatively to the combination of inflation concerns and rising bond yields. Technology stocks, which are often more sensitive to interest rate changes, were particularly under pressure. WTI crude is trading at about $101, slightly lower on the day. The dollar index's rise suggests a move towards perceived safe haven assets, including the U.S. dollar. Investors will be closely watching the Clarity ACT vote today for any impact on the broader market sentiment, especially for tech and growth stocks. The trajectory of oil prices and any further inflation data releases will be critical in determining the Federal Reserve's next steps. We'll also be monitoring the 10-year Treasury yield for any sustained move higher, which could signal further pressure on equities. Let's check in on the currency markets. The U.S. dollar index, or the dollar index, closed Friday at 104.8, marking a 0.6% gain. This strengthening of the dollar is largely driven by increased global uncertainty and a risk-off sentiment among investors who are seeking the perceived safety of the U.S. currency amidst geopolitical tensions and inflation fears. The euro against the U.S. dollar, euro-dollar, is trading around 1.085, reflecting the dollar's broader strength. A stronger U.S. dollar makes American exports more expensive for foreign buyers, which can negatively impact U.S. trade balance. Conversely, it makes imports cheaper for U.S. consumers. For global markets, a stronger dollar can put pressure on emerging market economies that hold dollar-denominated debt, making it more expensive to service. It also influences commodity prices, which are often priced in dollars. The dollar's rise on Friday indicates a clear preference for safe haven assets. WTI crude is trading at about $101, slightly lower on the day. This move has put downward pressure on other major currencies like the euro. We'll be watching for any shifts in geopolitical tensions and upcoming U.S. economic data, which could influence the Federal Reserve's interest rate decisions and, in turn, the dollar's trajectory. Any significant changes in global risk sentiment will also directly impact the dollar index. Now let us turn to today's live market snapshot, where gold, crypto, stocks. Now for our daily financial market update. Here is where the key asset classes stand as of Sunday, May 17, 2026. Gold is trading at about $4,560, lower on the day, and is sharply lower over the past 5 sessions. Silver is at about $78, sharply lower today, and sharply lower over the past 5 sessions. In crypto, Bitcoin is at about $78,100, lower on the session and lower over the past 5 sessions. Ethereum is at about $2,200, lower today. Other major crypto, Solana at about $87, lower. BNB at about $655, lower. XRP at about $1.417, lower. On equities, the S&P 500 at 7,408.5, lower. The Nasdaq at 26,225.1, lower. The Dow at 49,526.2, lower. Internationally, the DAX at 23,950.6, lower. The Nikkei at 61,409.3, lower. The FTSE at 10,195.4, lower. On the bond side, the 10-year U.S. Treasury yield is at 4.6%, strongly higher on the session, and the 30-year yield is at 5.1% higher. Elevated yields continue to place pressure on risk assets and growth valuations. Rounding out the macro picture, WTI crude at about $101 per barrel, slightly lower. The dollar index at 99.27, slightly higher. Euro dollar at 1.163, slightly lower. The picture is mixed across asset classes, with no dominant directional theme yet. Investors are watching macro catalysts closely before committing to a clear risk stance. As we head into the new week, all eyes will be on the Clarity ACT vote, the Federal Reserve's next move on interest rates, and the ongoing impact of surging energy prices on global economies. Thank you for your attention, and we will see you again tomorrow.